Hello, traders out there in Traderland. Welcome back from a 3-day weekend. And boy, what an eye opener. It's Tuesday, February 22nd, 2011. My name's Des Woodruff. I am the mentor and analyst here at freeonlinetradingeducation.com. DBA Grok trade, and the markets come crashing down. Look at this. We are down 178 points and some change on the Dow, down 1.45%. The S&P down over 2%. That is ginormous. The Nasdaq down 2.75%. And about the same on the Russells. Banks down 2.4%. VIX spiking 26% up. Fear indicator is off the charts. Gold up. Silver up to a 30-year high. US dollar up by 0.25%. Crude oil up due to Libya up nearly 6%. Here's the S&P technical analysis on the daily. Boom! Straight down. Finding support at the 20-day moving average. We were at resistance. We are now heading southbound. Last time we had a candlestick of that size, we rallied immediately. Does that mean that will happen again? Absolutely not. Tomorrow, Wednesday, will be crucial to me as a technician, telling me what I should be expecting in the markets to come. We have divergences. See us going up here, going down there. Doesn't surprise me that we dropped. We were overvalued for quite a long time. So if anything, we should have been light. But if we were full bore bullish, you've been hearing me say, you make sure your stop losses are in place, because when they do drop, they mean business. And it's horrible. I mean, look at this. We're going back. We haven't had a drop like this, this big of a drop since last November. But look at this. If we were to just go back on this drop, I mean, the profits you made in the last 2 weeks are just wiped out in a single day. Building a case for stop loss. Also building a case for the proper management of stop loss placement. Most amateur traders, what they do is they don't know how to properly manage their stop losses. So what happens, they get what's called whipsawed, meaning that the stop loss gets triggered, you're out of your trade, and then you see your stock go up. Now, what happens mentally, psychologically, is we believe that the stop loss is the enemy. Stop loss is our best friend, as you can see today. So those that were in any stock out there had a stop loss underneath the previous day last Friday, got out, took a little bit of a hit, but did not give back 2 weeks worth of profits. Do you see what I'm saying there? So it's really important. Now, long as the feds are buying up government bonds and the QE2 is still in place, which it is going up until June, then I'm buying these dips. So I was nearly flat the market, had one play going into Friday. I stopped out of that today, and I had sitting on a lot of cash, and I'm right at the end of the day, I picked up some longs, anticipating a bounce off the 20-day moving average. However, I'm still light. I picked up half positions, and I would say I've only got, I don't know, 10-15% of my cash out on the table right now, because we are dropping. Anything can happen when things start to drop, and things in motion tend to stay in motion, so we have to be careful with this. Listen, volume was decent today. I'm going to the spiders. This is the ETF on the S&P, and look at this volume spike. Look at the volume spike on this red candlestick, big volume, and look at the big volume on this drop here. That's big money coming in and participating in those drops. Smaller money participating on the run up. So tomorrow is going to be a big day, as far as I'm concerned, on what we can expect. Here's the Nasdaq. We dropped below the 20-day moving average, my blue line there, and we rallied. Dropped below the 20-day moving average, and we rallied. We dropped below the 20-day moving average. The question is, will we rally? Look at this massive negative tick on the histogram here on the MACD oscillator. Massive. So right now we have falling knives. The idea is not to try to catch any of these. So let this also be a wake-up call right here, that you can't be eternally bullish, or meaning that you're bullish without an exit plan. Now, you have to play what we see. If we're going up, you got to remain bullish. But if you see that you're way overextended and you're just going up, 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 you need to do a couple things. You have to protect your equity. Listen, capital preservation comes before making money. So your risk management is paramount. You have to know how to properly manage your stop losses. You need to know how to hedge yourself. You need to know how to know when to be flat the market, be bullish, be bearish, in these markets. All very, very important. So make sure that you go and watch the 101 courses, educate yourself. Some of you have been trading a long time, think that you're beyond the education that we might deliver, and I'd beg to argue. Then the information on the 101 courses will fill in some blanks of things you didn't know. 201 courses are very advanced, and it's 6 full hours of training, so knock yourself out. We have mentor program coming up this weekend. I'm taking in a small group of individuals that I'm going to train how to trade. If you want to come in and join us and you want me to mentor you on trading, be happy to do that. Contact me at mentor at groktrade.com. Take care. Safe trading to each and every one of you. Let's watch these markets very closely. I'll be doing a video pre-market tomorrow. And shout out to Miguel. Thank you for standing in for me on my videos, and I hope those of you who speak Spanish and would like to get mentored through him will take him up on his free webinar he has coming up very soon. All right, take care. Safe trading.